All right, people. Welcome as we're coming on. All right, let's go. All right, let's get cracking then, guys. Yeah, so it's been an interesting couple of days going on since the market has done quite a few crazy things. I've been away. I've been celebrating my birthday and just having fun. Okay, just chilling out and stuff like that. So I haven't been on really on the charts. I was in gold. It was a good trade. It did reverse quite massively, but I didn't get a chance to look at the chart, so I couldn't observe what was going on. So, but we can have a look at what we have going on and, pick out some interesting factors and things that the market definitely will be aiming to do. So I'm going to start off first with this, and let's kind of crunch in on the numbers. Now, the dollar index is always the first thing that we'll look at, and let's just take a look at what actually happened. Now, guys, can you remember what I did say about the dollar index, which is why I always say to never say never? Now, if I draw this order block here, it might ring a bell. If it doesn't ring a bell, it's fine, but let's just take a look at this anyway. Now, remember I said that the dollar index here, if we take the range from the beginning of inflation 2021 till now, we have an equilibrium order block, which is resting over here, which is this demand zone. But then we also have this very important supply zone. Now, I'm using green instead of the normal blue that I usually use to represent supply, just so that we can have some informational, visual information, transmitting to our brains. Now, from 2017, you know that the story already with this, I hope. Now, in 2017, we had this order block here. The price gave us a sell-off here. We got to 2020, the wick of the candle did strike above or push us strongly above this order block, but because there was no body close, the price continued to go short. Now, the key thing is here is that when we're looking at, trend and in terms of order flow and stuff like that, the swing lows here, we started to get higher lows or higher swing lows to be specific, which was an indication that we have some bullish activity going on. And then 5 years later, from 2017 here, in 2020, we had the first break above this order block for the first time, in 5 years. We had the return, and then we had the push. And now before I zoom out to talk about why we're looking to the left here, the price pushed over to the left here, and we had a very strong short situation going on. All right, when we had that strong short going on, right, this is the sell that we had. The price didn't give us any interactions. There was no stop punch, there was no induction, but the price just dropped massively down here. And we've been in this phase where the price has kind of been bouncing around this area and not really giving too much information about what it wants to do. Now, for me, because this is at equilibrium, we have this order block here. I told you guys that from Tuesday, which is tomorrow, August the 1st, in order for us to know exactly what the price wants to do, we need to wait for this monthly candle to close. Now, at the time when I was speaking, the body of the candle was right at the edge of the zone. But lo and behold, magically, you can see that the dollar index has come back all the way inside of this order block with the body of the candle. And all we have right here is just a wick. Now, for me, I don't think inflation is just done just yet. I think there's still more inflation left to go. And I think the dollar is going to have another rally of strength before it has this inevitable crash that is going to happen. Now, in the meantime, unless there's going to be a major move today, this month is going to close inside of this range right here, which puts the price in a position where it actually can go for a long. Now, saying all of that information here, if I zoom out a little bit, I'm going to get rid of this for a moment. And just let's look to the left. Now, to the left here, if we're talking about order blocks, and now I'll use the blue because we want to talk about supply right here. Now, if I use this area here of supply, notice that when the price wicked up over here, it didn't actually, it used this demand zone, which can be a flip zone here. But, well, some of you may call it mitigation zone. I call it a flip zone. That's how I've known it for 5 years now. But the price, instead of doing that movement into the supply as it should, push back down here without returning here. So to me, there's an unfulfilled efficiency at this high. Now, if you do some study, like I've been studying the chart price, when you go down to the lower time frames, to the 5 minute and the 15, the high that we have here at 114, 114,688, they're actually equal highs or relative equal highs at the top of at this high right here. The highs here are relative equal highs, and there's another pair, I believe, that are exactly the same, okay, or 1 pip apart, something along those lines. So because there are equal highs there, I know that the price will be a magnet for that high at some point, which means to me, I know that sooner or later there will be a rally here to go. Now, if we ever get a month in this year, especially that the body of the candle closes beneath this supply zone, then we should be looking for a sell. But until then, like I was saying to you, that don't assume that the dollar is bearish just yet, guys, because of this movement. Because one thing about monthly price action is that you have to wait a whole month to know what's going to happen. Okay, and so this puts the dollar in an interesting position where we actually could be seeing the dollar index producing a move which could put us into position for a very strong dollar movement for the rest of this year. Okay, now for that to happen, of course, it's going to take a lot. The only thing I don't like about this price action, I guess, I don't know for sure, but let's just double check. Yep, it hasn't. Is that within this demand order block to the left, I was hoping that this movement here, that we had this stop on movement here, the price would have done it within the order block, which is why I was expecting the price to do another short last week. But it actually did a short then a long, which is cool. Let's just use this for demand here. Wow, but now that sets up an unfulfilled efficiency here. So my question is that, okay, well, in the month of August, it's very clear that the price is most likely going to close within here because there isn't any more high impact news for today. So it's not possible for the price to actually be in a position to have that many pips unless there's some news from, or maybe there's a speech from Joe Biden or something like that. But because there isn't anything of that sort at the moment, it's very unlikely that the price is going to drip below this green area today. That's the first thing. So, based on that assumption and analysis, we can safely say that the month of June, the price is actually going to close inside of this area here. Okay. Now, let's get back to where we were because I don't want to lose my lovely analysis here. Okay. So I have multiple of the dollar index charts. So if you see me scrolling around trying to find one, I've got hundreds. I think maybe I should delete a few because it might get a little bit confusing here. So I'll just get rid of a few of these so that it's a little bit more breathable. Okay. So anyway, back to the one that we were using here. It's very clear that the price is going to close outside of here. But what I do expect possibly is that we may actually get the unfulfilled efficiency here filled, or it may be left behind because as we went through in our example last time, unfulfilled efficiencies can be left behind for many years. The example I used last time was Euro USD, which if you look back in history here, let's go back here. Now, we had a liquidity gap that was left behind from a speech from President Macron, okay? And that speech that there was a gap that he left behind. Let me go to the weekly so I can grab this properly. So from that speech that he gave us that time, I know there was a larger gap that you were seeing, but this is the one I'm talking about. It's between these two purple lines over here, all right? This gap right here. So this gap right here, this was left behind. It was extremely bullish for the euro. We have the 60 pip gap roughly, but the market chose to continue going long for the next 3 years until lockdown, when we had the lockdown situation, and they used the lockdown moment as a moment to fill out this liquidity gap that was left behind for the last 3 years. And so this is why over here we had this reaction that we've had, we had with the price. Okay. So the higher the time frame, sometimes the it's not a necessity that the liquidity gap has to be filled or some sort of inefficiency. In some cases, on higher time frames, I'll say like weekly and monthly, especially, you may have an inefficiency left behind for a while. So this is exactly why I would say to you that this is, this is not a necessity that it needs to be filled out. And I'm not being biased because I want the dollar to go for a long, but it's just experience for trading for these many years is a thing that definitely can be the case. Okay. So now that we have this in view, if the month of August, the price decides to come back down here and take these lows, because again, the reaction that we had here was just a simple touch beneath the previous week's low and then off we go, which is not really convincing to me. If I'll be really honest with myself, I'm not convinced by it. I do think that there is room for the price to kind of spike down here. That could even be this week because we do have the NFPs. We have quite a large plethora of news coming in for the month of August. Nothing left for the month of July. So in the month of August, we may see this happen in the first couple of weeks, and then the price may retract and go long again. There's so many different ways the price could actually fill out this unfulfilled deficiency, or it may just completely leave it alone and come back to it a year later, 2 years later, who knows? Okay. So with the dollar index in view anyway, at the moment, let's just go to the daily time frame here. The kind of range of operation that the dollar index is moving in right now is this range right here. Okay, this demand flips on. You can see we have the little touch of the wick. Price took the high of the previous day here, which was Friday taking Thursday's high. And we have a little bit of a sell, nothing major. Now, we still have a liquidity void here, and there's also room on the upside to even go above these highs. But ideally, what I do think is at the moment, I guess my concentration is on this movement right here. So that's my view at the moment. So if I go over here, H4, H1, okay, we had a very strong movement that came out with the GDP news for the US. And so if we take these last two candles here as demand, because this last candle here is a bit too small, you can see that we had a very sharp move long. And this sharp move long that we have left behind a liquidity gap here, right? And then we've left our typical liquidity voids that come with the news. Now on the H4, this low right here is also the low of last week. So there is room for the price to definitely want to come back down here, which will mean a weaker dollar for the moment. But of course, for that to happen, we'll need to just, kind of find the trigger of what would happen. Now, the next day, the price did actually take the high of the previous day here. And it looks as though today we've had a return back into supply. So if I just drag this over here, we've had a return back into the supply zone. And this is where the price is kind of operating from at the moment. And we can see that right now, there is a little bit of a reaction here going on. Nothing much has happened today, but we have had a few touches within the supply zone, even though there's a liquidity gap here, which is why I don't trust it. But I'm expecting the price really to give us something like this. This is the most viable option to fill out that liquidity gap and the liquidity void, and maybe even take the low of the previous week. Okay, so I'm actually looking for a bearish dollar, just looking at the H1 already. And of course, we'll need some news or something to confirm what's going on, and we can, make some adjustments there for our moment of history, basically, that we're looking for. So anyway, let's come back over here and let's look at some actual dollar pairs and see what's going on. Now I'm going to delete all my charts because when it gets to a new month, I always like to kind of clear out all my charts, and then we can take a look here and see what you've got going on. So I'm going to delete all my charts and start again. If you don't do this often, guys, this is very healthy to do. Trust me, you should be doing it. All right. So I'll take this all off here. I'm just going to keep this one chart. And let's just take a look and see what I've gone. All right. So let's look at Euro USD first of all. Let's see what's happened so far. Let me get my template here. So looking at the major pairs just briefly, I'm going to go to the weekly here. Let's take a look at what's happened. So far, we're operating in a really nice range. We have this weekly induction here that the price has done. And it seems as though the head of it, this movement, has come into the, now we need a body close here. So we might get the price going above the high right here, but at least we do have a gap here that starting to get filled out, you know, with this bullish movement that we had. Now going down to lower time frames here, the daily, Friday's price action seems like we've got this same kind of reversal pattern as with other major pairs here. Let's go to the H4 and C. So this was a really nice move. I didn't actually take Euro USD. My focus was on gold last week, but the price did do this nice reaction here, taking the previous daily low inside of this order block here. And because we have a huge liquidity void left behind because of the the pound, the GDP news, excuse me, getting tired here. We have a liquidity void that's been left over. Now, my thing is that there's a few options. I do think that there is a temporary long that would come out of this at least, or an extended long, depending on, you know, how far the dollar index goes down. But the price is actually pushing long right now. I'd love to see if we could get this return right here, just because we've had a nice break of market structure here after that daily induction over here. Let me just draw a line right here so that it looks a bit better. Now, with that in mind, I'd like to see if we can actually get a pullback into this area of the order block at least, and then we go back over to the long side situation here. That would be pretty cool. Then that's kind of like my view that I'm waiting for at the moment. Now, again, because there's so much Australian dollar news, and I'll show you this in a minute, my real thing that I want to be focusing on this week will be Australian dollar pairs, because there's so much news on it, which means there's so much opportunity to capture, you know, quite a few good trades. You know, so, you know, with that reality in mind, I am really, really looking forward to trading Australian dollar pairs, at least, or finding the most suitable. Now, it's not always going to be AUD/USD, which is usually my go-to, but, you know, there are other ones out here that really can get the job done as well. So if I go over to the monthly, then a weekly, what do we get? Now, AUD/USD at the moment is not really looking the most technically, you know, sound or sweet. I mean, I can confirm that we do have bullish order flow, if you want to put it that way, or a trend, in the sense that even though the price has been selling off here now, I want to just put this out here already, that my interest really is the way that these highs have interacted with each other, these two here. They haven't interacted with each other right here, but once the price got back to the same level, we had a drop. Now, to me, this is a double top formation, which is a very common retail pattern, which means there should be a lot of stop losses. Now, at this neckline here is where, as a traditional trader trading this double top formation, the neckline, as soon as it breaks, is where you should be looking for a sell. And at the moment, the neckline hasn't broken. So if I'm thinking the way that the market would think, is that one of the best ways that they could possibly catch traders out right now is to actually create a situation as though the neckline has broken, because this is a double top formation. Let me straighten these lines out so you can see where I'm coming from with this. So make this a bit straighter here. All right. So we have this double top formation. This is the neckline, right? Now, we don't obviously trade like this, but this is a common retail pattern, and algorithmic machine learning knows that retail traders trade like this. And there are people who still trade in this manner. So right now, there's a lot of people who probably have sell stops beneath this low right here. And the low of this month, okay, this is not the low of the previous month, which is the low of June, but the low of July is right over here. So if the price breaks below this neckline in August, that would be such a great scenario to trigger people to want to sell and then push the price long to these equal highs and possibly get to the next order block here, which is where the next unfulfilled efficiency is here. All right. Now, the final move I'm looking for before AUD/USD actually gives the massive sell that I'm expecting, it really is going to be here, which is the trigger of the initial move that we had for 2023 anyway, which will be right here, and then a very big sell. So I think looking at this already, seeing how the move looks, to me, it makes so much sense for AUD/USD to actually try to, well, to do a fake confirmation of a double top formation, right? Because these are two monthly highs as well, which is a higher level of liquidity above these highs will be buy stops, all right? And then push the price down, take the lows, right? Get the lows taken, or start to proceed for a short until, you know, enough people are enticed in the wrong direction, and then completely flip the price the other way. So this is kind of what I'm looking for with AUD/USD at the moment. And the reason why I'm saying that is, I mean, even if you look at how the lows are forming, we do have higher lows here. So there's undertones of bullishness here. So it'll be great to see the market just manipulate everyone short and then go for a long. Now, at the moment, the last major short move the price has done is at this area here. The price took two highs in this 1 week here. We had the high of the previous day and the day before that. So with that movement here, you can see that the price right now is seeming to push up pretty long. So if I was going to take a punt on what I would do if I was trading AUD/USD right now, I'm actually going to look for a sell inside of this order block here. So I actually want to see the price get here. And because we have Australian dollar news tonight, or tomorrow, excuse me, at 5:30 in the morning in the UK time, if the price doesn't reach all the way to its target during that time at 5:30, I actually will wake up at 5 and be prepared for the price to spike into this area if it doesn't get here before the news to the end of today, okay? And I'll be taking AUD/USD short until it gets to this low right here, which, funny enough, we have a nice H4 hidden, but we have a H4 order block right over here. And this H4 order block that's formed over here, if you look at this low, the low of this candle was touching the area, but it didn't return inside of the area. So that would be a perfect target to come out at, which will give me 225 pips if it goes for a long, and it will give you the same. Now, the price may attempt to actually even go for the high of the previous week, which would be even better move. But either way, we have opportunity to grab some serious trades on AUD/USD. So that's kind of like my view on it. Now, with the Japanese yen pairs, I've already given out a lot of trade signals on that, and they actually played out pretty well. If you go to the H4, if you remember my order block over here we're talking about, it's just that the manner in which the price did it was a little bit drastic because we had this, you know, strong wick, very fast move. But price has wicked into here for the RTO, as I call it, return to origin, and now is up at 462 pips right now. So pretty lovely stuff. NZD/USD, it's going to probably be most likely similar to the Australian dollar because they are very similar in their movements. All right. On the monthly time frame, we had an interesting move here where the NZD/USD has taken the high, or these equal highs of the previous months, but the body is still in range of this supply zone. So that could also set up for a quick sell before a buy. Again, with NZD/USD, I'm expecting the price to give a major short in the same manner because they're exactly the same thing, which is NZD/USD needs to come back up here into this supply order block. All right. Fill out this gap over here. All right. And then give us the short. And you can see the price has been kind of working its way. If you look at these highs, so far the highest high is here. So very close, but just not inside of the area. So I'm still up for the buy one more time. Once it gets in here, then I'm ready for a one hell of a sell. Okay. And I believe at that point, the dollar index will most likely be ready for a massive long too. And then we get this short going on that I'm expecting to happen. So in the meantime, whilst we're, you know, paying attention to this move here, very similar to AUD/USD, I'm expecting to have some sort of trigger for a short and then after a massive long straight after. Okay. So I'll be paying attention to that whilst I'm looking. But for now, AUD/USD looks pretty nice. All right. Pound USD, been another awesome pair, is inside of this supply range now. And on most monthly and weekly time charts, it shows that we have this gap here and we have these triple high equal highs here at 2022. So we have all of this stuff going on now. I don't want to put so many lines because I don't want anyone just tuning in now to mistake it for support and resistance, which I personally don't trade. I trade supply and demand and all the blocks and stuff. So anyway, with that being said, Pound USD has been a pretty nice pullback here, and I'm not surprised it pulled back the way it did with this strong short. because it came into an important area of supply that it hasn't been to for quite a while, which is right over here. So this supply order block here, let's just go over here, that was formed. The price came into this area and had a strong reaction. Though it didn't have a induction to do this, just being inside of this order block, there's a lot of supply liquidity there, which of course would cause the price to do something. Now, on the monthly time frame, the picture of pound USD is pretty interesting. It's come back into a very important monthly range. And the monthly range it's come back into is this order block here. The body of the candle hasn't closed in here, but the wick has entered into this range right here. And it's very clear that pound USD is closing in on this last liquidity void, because after this, there isn't any more liquidity voids on pound USD for a little while. The next one doesn't really start until 1.59 and above, which is, a very long way away from where we are now. And that was 10 years ago too. But over here, we have a liquidity void, and you can see that pound USD is starting to creep up to do so. Now, because the price didn't actually give a reversal induction here between the highs, I'm actually convinced that pound USD would like to go long one more time. I mean, if you look to the left here on the weekly, we have this supply order block here. So we had a very nice movement where this price was holding supply for a while. But of course, price returning in here, there wasn't that much liquidity, so it didn't really make a major swing down. Price broke above. We had this return right here, which was a brilliant move. And now the price has continued to make higher lows. And we've had this move last week that happened here, where the price actually took the low of the previous week before that movement when we had the short. And now we actually are set up for another long. Now, it does look a bit weird, but these two candles can represent demand, because as I taught you in the 4-part series that I gave you guys, if the last candle before a demand zone by definition is the last bearish candle, in my case, a red candle before the price changes direction, right? So that last bearish candle here, the red candle over here that we have, one of the rules though is that if the body of the candle is a lot smaller than the wicks, then you also want to use the candle before and use that as a demand zone range, okay? And if you do that and you put these two candles together, you get a very beautiful range here. Let me turn this back into what it's supposed to be, which is a supplier zone. So you get a very beautiful range over here, which is our demand zone that we're working with. So when you put these two things together, we have weekly demand, which is these two candles here. We have a weekly induction over here. If I go over to the D1 H4, right, this is what it looks like from this angle. So from this angle, it looks even sweeter, because on the H4, we actually have a very nice big H4 demand area too, right? So if I shorten these lines out so we can look at it in a bit more detail, this is the actual movement here. This is the actual induction right over here that we're looking at right now. This is it. Now, for this trade to work, of course, we're going to need to see some market structure break for this to really pan out. Now, the great thing is, on Friday, we did have the daily move, which is a good confirmation, right? And we had some, as soon as the price took that low, you can see that we had 4 candles all in the same color, all bullish. So that shows you that that's a distribution of liquidity there. So some sort of player has stepped into the game, right? Now, what we do also need to match that would be a break of market structure. Now, we actually don't. Now, for me, I like to use break of market structures that have happened before the distribution move has happened. So there's only 2 swing highs that are available, and they're very far apart. The only swing high really on the H1 time frame is actually over here. Now, when I do this, we don't have a market structure break as of yet. We have some wicks above the high, but not a body move yet, which is not really that great yet. So we can't really go on that for a confirmation. Now, because of the time frame we're on, I mean, on the 30-minute, there is a break of market structure here, which is all right. On the H1, there isn't. Usually when a market structure break is going to happen, at least the H1 is a good point to start. But on the M30, we do have one. If we were to go based on that and take the risk, then we'll be looking for the price to return back down here somewhere during this week, and then we should have a very strong rally, okay? And that's ideally what I want to kind of achieve when it comes to looking at these prices here with pound USD and the rest. I want to see what the market is going to offer on that regards. Okay. So USD CHF, let's go over that because I promise I'll make sure I do the major pairs every Monday with you guys. USD CHF at the moment is starting to kind of push down a bit. I guess the dollar index is starting to lose a bit of strength. If we look over here, we'll be able to see this in 4K. And I guess as we just did the markings for, you can see the reason would be is that price took this high. This is the supply order block, and now it's starting to find its footing around this 3 o'clock mark, which is not a surprise. Now with USD CHF, it's been pretty interesting here. We've had a crazy month with it where the price has pushed so much lower. And actually we had this little kiss of the previous weekly low here, just beneath it, and bam, very strong shooting up of the price. Almost 200 pips that move was. Now, looking at what we were talking about USD CHF, I'm still of the conviction that we are going to go for a long, if that's even a word. I'm still convinced. I said conviction. I mean, I'm convinced, right? The price has been in this tight range for a long time because it hasn't actually returned to the supply order block. So there isn't the liquidity ready to drive the price down here. Now, I wouldn't say it's a shocking turn of events, but the price has decided not to follow through with this 2021 low stop hunt and is actually pushed a bit higher. If I go over here to look at where the range is right now, if USD CHF actually does close outside of this monthly range, then it probably will flip the zone and come back down. But then what we should be expecting USD CHF to do, which is even better for us, is use this order block here, right, on a monthly, or use a weekly version of it. Now, this kind of range that we're operating with here, unless USD CHF is going to do something special today, then we should be looking for the price to actually go for a extreme short. Now, the other side of the story to this is that, of course, this move here, which is the 2015 crash, when the euro depegged from, or the Swiss franc depegged from the euro. From this standpoint here, right? Let me just put something out here for you guys to see. This is the bottom of this movement when the crash actually happened, right? So that's the full liquidity void here. If you notice, the price has stopped at the end of this liquidity void and has actually finally filled out the weekly body of this movement. So from this standpoint here, it is possible that the price could still do a silly move and actually go long from here. Now, USD CHF, because of that historical fact, which is not really known by every trader, that's where you could actually get yourself in a situation where the market could actually throw you off. And so I'm not going to throw out the long just yet, even though I know the monthly is a little bit out of sync with what we're looking at. Okay, this was the weekly move here, and look how much liquidity came out of this movement. As soon as the price took the low, we had bam, 186 pips just like that. Now, looking at the M30, you can obviously see that there's gaps all over the place and stuff like this. You know, liquidity void over here and stuff. So if we do get a return over here, this might actually be the move for a long. And this might be the beginning, since on the weekly, we filled out, we're right at the bottom, we filled out the complete liquidity void left behind from that last crash. So I'm not going to put it past the price to just go short just yet. And so I'll be watching USD CHF with the dollar index to kind of figure out what's going on there. And that's really my comments for now. Now, the last one, USD CAD, before we look at the Japanese yen pairs really quick. USD CAD right now is having it's a beautiful movement already to start off the day. We've got 86 pips over here. Really, really nice moves to start off the week. And it looks as though USD CHF is really still trying to find this footing on the monthly. I mean, this is where the price is kind of ranging at. I do think that looking at this from the deep daily time frame, that there is room for USD CHF to probably push down even further. If you look over here, we have this order block here. Let me just put this down right here. We have this order block right over here. And if I go over to the left, okay, right? If we check over to the left and see what's going on, we've got a liquidity void between the range, this range from the bottom of this low right here. There's a liquidity void of 63 pips, and then there's an order block. Now, all the other price action to the left here is all efficient. If we follow through, if we go down, we'll see that this demand zone price, takes off here, falls back in here, goes for a long. All right, if we go down again, let's take a look again. We draw this order block right here. You see that price takes off for a long, returns back here, pushes down, goes for a long, pushes down. So we have this scenario 3 times over, which means that we do have a position here of efficient price action. The only order block which is not operating inefficiency right now is this one right here. So I'm actually convinced that USD CAD will this week at least push into this area, which will put us in a position that if the price gives us a trigger, then we can actually go for the long that we should be expecting on USD CAD. So I'm actually looking for that movement, and USD CAD already kicking off the week with this kind of strong movement here. I don't buy it because the price may decide to even wick a little bit higher here and go to this supply order block derived from the manipulation bar over here. But for now, so far so good, is been dropping with no problems whatsoever. Okay, now this is my overview when it comes to pairs like this. Now with the Japanese yen pairs, it's been an interesting one that we've had this major kind of movement here where the price drops strongly short, then strongly long. I guess if anybody caught these movements here, you would have been a very happy person that week. And obviously it's a little bit strange as to what's going on. Now, for me, with Japanese yen pairs, because of its nature of its economy, which is an exporting economy, when there are major changes in the strength of the dollar, it can really affect the Japanese yen directly. And I'll say semi-indirectly in the sense that, one of the major trading partners with Japan is the US. And so sometimes when the dollar price changes for stuff or the dollar becomes weak or stronger, it can have an effect on Japanese yen pairs also. Okay, so we had a very strange effect that happened with AUD/USD and the Japanese yen pairs, where they all seem to kind of spike down and push back up. Now, I believe that, of course, this is market manipulation, but again, it's still something that when you look at what the price is doing, okay, it was perfectly timed and necessary to the price to do what it did. Now, for me with Japanese yen pairs, my favorite is pound Japanese yen at the moment. One of my friends who trades pound Japanese yen has been having great success with it. But this is kind of the trade that I'm in. I'm just testing it out to see what happens. Now, let me lighten up this order block so that it looks a little bit more clear what I'm doing. So, all right, when you look at this order block, guys, this movement that we had was a fantastic movement. I can't deny it was amazing. However, my only concern when I look at this is that we had this high here. We have these equal highs here, which is the high of the month or high of the week, the 3rd week of July, all right? And then we also have the high of that month or that week, excuse me, which is here. And so the price has actually journeyed into this area of supply. My thing is that when the prices here were selling up and we had this major move, the supply liquidity that this is derived from should be from this supply zone. So for me, I've actually placed a sell right now inside of this order block here, just because I want to see, now that the price has fulfilled efficiency, if it's actually going to come down a second time and maybe do a cheeky movement where if I was to use this as the reference point, the price may actually take the low of this movement here. I'm interested to see. I just want to see what's going to happen here. If that does work out, that would be fantastic. But I'm kind of intrigued to know, what the price is trying to do with that. Okay. The reason I took the movement here is that if I go to the M15 as well, we had this order block movement here. And if you want to jump into this movement, you can actually right now. I'm actually, one second. I'm actually going to jump in here again. Let's just do this. $8.3, 260. Let's go for it. Yeah, so if you want to get into this move, you can, but this is what really I'm looking at, that the price entered into this 5-minute order block right here. If I go through exactly what happened, why I took the trade is because you have unfulfilled efficiency here. So maybe it's a bit hard to see because of this line, but in essence, once I saw the price get, get into this order block. Almost dropped my coconut water. We have this movement here. So this is the swing high here. It didn't return to the supply order block, but these wicks did. We had that kind of three movement, 1, 2, 3. So I'm expecting the price to actually sell off from here. We have a liquidity gap at the beginning of the day, which is already 185 pips away. So I think that this could end up being a pretty nice movement down, and the market may end up doing this 700 pip move. So it's a test to see. So far, so good. It looks like it's reacting pretty strongly. But let's see what the market actually does. If it does work out, then yes, it's going to be a great day. If not, then it's not going to be a great day. All right. So it'll still be a great day either way. All right. So that's that. Now, that's my pound Japanese yen trade. If you want to get in, you can now. It's at a good time, 3 o'clock. Let's see what the market gives us with that movement there. And yeah, I'll catch you guys later on that. Let's go over to the news. So of the news, let me go over and have a look at the news and see what we have here. If I switch over to the news quick, let's see what we've got. All right. So for this week, starting from Monday, we didn't really have anything too major in terms of news, right? Apart from Euro news, which can't really feel the effects of at all. Now, this is all in UK time, by the way. As I said, if you want to get in your local time, if you click here, set automatically, this will, when you click on this button, it's going to run the function and figure out where you are in the world and give you the time where you are. Okay. So let's click this down. So get rid of this drop down box. Okay, there you go. So over here, we have the Royal Bank of Australia's interest rate decision news at 5:30 in the morning. And it's expected to raise interest rates. Now, you've heard me talk about the Australian dollar already, so I'm really interested to see, what happens with that. Now, Wednesday, we have ADP news, which is definitely going to cause the dollar to go all over the place. And as I said, the Australian dollar news and also things like employment figures here, for me, I look at them as secondary points or secondary pieces of analysis. Okay, I use them one for time because time and price, in the theory of time and price, there are certain timings for certain price movements. And so the price action that we've had here for the day is we have New Zealand dollar news, which is participation rate, unemployment rate. Wednesday, we have this ADP news. Thursday, we have retail sales. So all of these different timings to 11:45, 5:30 or wherever you are in the world. These are, for me, ways to time, maybe to come out of a position, maybe to be prepared to get into a position sooner or later after that, maybe not on the same moment or even the same day, but just in general to kind of map time to price. Okay, so if you see the price acting or doing a certain entry and it's like 5 minutes before the news, then that might actually be the moment that, okay, the price is about to wick into here and then do what I'm looking for it to do, and etc. Okay, so this is how time and price really works for me. Now, this week we have the NFP news, and we also have the wall of fire, as I call it, on Thursday. So there's a lot of news, basically, guys, that we have going on this week. So there will be a lot of activity happening. Now, for me, the Australian dollar, the US is obviously a given. US dollar news is actually a given. We will always be looking at that. But with Australian dollar news this week, it seems like we have high impact news every single day. We also have Canada here, which could be some, a really good one. And of course, USD CAD right now, looking at the price action, if it does do that short before Friday, then I'll look for a crazy low to erupt on Friday the opposite way. But we will see. All right, so this is the news outlook. We have a lot of news, a lot of opportunity, and this week we want to get some. So if you guys took the pound Japanese yen trade with me, let me know what you think, and I'll catch you guys on the next video. Everybody take care.